The Modi government is soon going to complete 100 days being in power, a complete majority. Some would say 100 days is not really enough to assess the performance of a government which actually has been elected to power with such a huge mandate for a full 5-year term. But that's what we do. We analyze performance, be it short term, medium to long term. And to help us do that, not just that, but of course a lot more about the banking sector as well as one of India's top most respected bankers, Mr. Aditya Puri, Managing Director at HDFC Bank. Mr. Puri, thanks very much for your time.
Welcome.
Great to have you here. What is your sense? Has the mood turned? I guess the mood is turned, but have things really started moving?
I think, we've got to split this into two. One is what they could do in the short term, and two is what they can do in the long term. Some people are expecting this magic wand, which is not going to happen. But they are low-hanging fruit, and they're fruits which will give their benefit later on. So if you see in the initial stages, what they focused on has been what had not been done by the previous government and had brought the GDP down to the current level, which would be able to take it to the 5.5% to 6% level. Maybe our own estimates are somewhere between 5.3 and 5.5. This is predicated on getting the projects that have been stuck working, because the capital output ratio, which used to be 4, had gone up to 6. And if you can get just that done, that adds about 30-40 basis points to your GDP. Make sure that we have a stable rupee, a proper current account deficit, and a declining fiscal deficit. Plus, make people accountable. Also see that we do not have interministerial issues. And as well as define what we need to do to take it to 6% and then 7%, which would be having clear understanding on the fiscal deficit, where the importance is the GST and better tax compliance, as well as ensuring that through the direct benefit scheme, you reduce the subsidy, and then God has been kind, the oil subsidy should come down on its own. Clearly making sure we have a plan for our current account deficit and consequently the dollar rupee, changes that we need in our agriculture system.
You think all this is on track?
I think it's on anvil. Now, track is a question of definition. And there are two ways to look at it. You can hurriedly announce it, which the last government did, a lot of these things, and then not be able to achieve it, or put in a lot of hard work and come up with a plan that will be achieved.
Actually, two things which have happened is rains have picked up,
yes,
which is actually a great thing. And second is oil prices are down about $12, $13 or so, which
absolutely
is about 60,000 crores straight
yes
away, which the impact on trade deficit is trade, but fiscal deficit, everything else remaining the same. Our calculations show that it could actually come down to about 3.6, 3.7% or so. Those have been outside the control of the government.
What about the stock market? What about the fact that the bureaucrats have started working? What about the fact that accountability is being brought in? What about the fact that there are intensive discussions on GST? What about the fact that a large proportion of the issues in terms of pricing of electricity, coal, the policies, the environmental policies, a clearer definition. I mean, all that has to be put together. And our
so
own
it seems like Mr. Modi is very focused on the process of governance, right? I mean, basically making that easier. I mean, he, in his Independence Day speech, he spoke about him being very surprised to find governments within governments, ministries fighting each other. And he wanted to resolve all of that. That seems to be the focus priority.
I've seen this in Gujarat. We're the largest private sector bank in Gujarat and have grown exponentially. I've seen it in Gujarat. You actually very rarely did you have to go to Mr. Modi because the bureaucrats were empowered and most of your problems were solved. But he ran it pretty much like a corporation. Define your objectives, put the responsibility, and then monitor it. And I can't say definitely, but while I've been meeting people, both in the bureaucracy as well as otherwise, I think he's following the same plan that tell me what you have to do, and there will be a review, and you're accountable for delivery. I think if we just bring administrative reforms, which will bring efficiency, that's equally important as these big ticket reforms.
So, in a way, ending what you used to get called the policy paralysis.
Yes,
right?
absolutely.
Just getting that done.
Absolutely. So, and we've seen the bottom's gone, and as you rightly said, between the rains, oil, stock market, some amount of sentiment, all of that, we have seen an uptick. You would have seen it in the RBI report the industrial production is up, inflation is down, current account deficit is in control, dollar rupee is stable, fiscal deficit, as you said, could come well below the estimates. People would have even let him get away with 4.5. So between his divestment drive and increase, I think we're moving in the right direction.
You know, you spoke about what you saw in Gujarat and bureaucrats, and this is what we picked up as well over the last couple of months, that the model is a hub and spoke. Mr. Modi is the hub and bureaucrats are essentially spokes.
Yes.
Is that essentially what you're seeing as well, what you're picking up?
At this point, picking up, yes. And very clearly, during our experience in Gujarat, it was there. If you go with a problem, you will get a reply, and they know what they're doing.
Okay. The finance secretary recently put out a growth expectation about 5.8% or so. The first from a government official after the economic survey. 5.8 is at the upper end of what the RBI said, the economic survey range, which is 5.4 to 5.9, IMF, other agencies as well. Do you think it's kind of a stretch or it's possible? 5.8.
See, everything is possible. Our own estimate is somewhere between 5.3 and 5.5. He is privy to more information, so 5.8 could be possible. But in my own view, it doesn't make a difference whether it's 5.8 or 5.8. If we see 5.5 or 5.8, because if we see the economy turning around, and if we reach that 5.5 level, and we have taken the measures that are necessary in terms of what I talked about, the fiscal deficit, investment, policies, etc., then 6 will follow. So I am actually not so concerned whether it's 5.5 or 5.8.
Okay. What's your view about the way? Obviously, he wants growth, right? But the market had a certain narrative in mind about how he's going to actually go about getting to that high level of growth. A couple of times he's spoken about, well, give me 10 years. Mujhe 10 saal dijiye. Right? Is he giving out a hint that, well, you know, it requires a little more time?
No.
And,
he's telling you, I've come here for the long run.
Okay.
But if you see what is being put in place at this point of time very clearly and has been defined by both the government and the Reserve Bank of India, that we will be moving to a firmer fiscal deficit regime. We will be moving to subsidies reaching the poor. We will be moving to more financial inclusion. We will be moving to efficiency. We will be moving to taking infrastructure to the masses. So it's as important for electricity, water, and roads to reach the masses as money. So they have actually defined what they're going to do, and most of what they're going to do is not that difficult.
One basic question, when they defined their fiscal deficit target as 4.1%, right? And they said that it's going to be lower in successive years. So actually public spending that you are going to see in fiscal 15 in many areas is going to be the peak. It's only going to fall from here. Is that the right way forward according to you? I mean, is that the correct way forward when you've got low growth? Shouldn't the government be spending?
No, I don't think they're saying public spending itself will go down. Unproductive spending should go down. So there's no point just doling out money, causing inflation, and not even improving the lot of the poor. So when you talk about subsidies, for instance, general subsidies don't get you there. It subsidizes more the rich than the poor. So if you talk about specific subsidies, you can bring down the subsidy burden and yet do a good deed for the country. If they talk about accountability on expenditure, like if you see Dr. Jalan and on the Expenditure Commission, I was appalled when I saw that, you know, you spent the money, which is fine, but you got to see the results. And if you can get accountability, you can, so the fundamental point is going about in a disciplined manner will get you a better result with better fiscal prudence and a stronger country at the same time. These are not mutually exclusive.
Fair enough. Mr. Puri, but it's interesting that although they're saying all the right things and what financial markets want, which is a lower fiscal deficit number, and that's what markets want world around right now. But if you look at the detail, for specific programs, allocation has actually gone up. So they're not doing something very drastically different than the last government. In terms of accountability, maybe yes. In terms of putting systems in place, maybe yes. But in terms of actual allocations haven't gone down. NREGS, for example.
Yeah, but if the NREGS, instead of just being a dole, is used to create irrigation canals.
Fair enough.
I think it makes a difference. So I think what happens, boss, is that we all tend to look at one thing and criticize on the other thing. They've got a big task. I think they're moving about it systematically. The rain gods are kind. The oil demand is good. China is kind. And if they do their job, I think it'll come.
And who would have thought, right? With all this unrest around the world, oil prices have actually come off.
Absolutely, absolutely.
Amazing.
So a lot of these things, I would say, if the trajectory is right, then it should move like the laws of motion. We should know, if we know how all the atoms are interacting with each other, then we can forecast the trajectory. And at this point of time, he has actually improved it. And if he can get the center-state relations right, I think there will be a difference.
Fair enough. I want to talk about financial inclusion, which is right up there in terms of their priority areas. Bank accounts for all. How do you view this? How significant is it?
I think if you look at financial inclusion, it's a must. It's a political necessity, economic and social necessity.
Right.
And what has happened in the past, we've been spending the money, but it has not reached the intended beneficiary. There are two parts that the way this government has defined financial inclusion, which is correct. Part one is financial access and he actually being able to get the money that was intended for him, and through an operation of his account, create credibility that if he's going to get this much subsidy, you can probably discount it and give him a loan upfront. Phase two is to create viability in the remote areas of the country by making sure a combination of infrastructure, finance, financial literacy and training comes together, and you actually create opportunities for him, whereby you need to revamp the agri chain, you need to get more industries there. That's the second part.
For the banking industry, is KYC a challenge in doing this?
KYC was a challenge. Now that in the interior they've said Aadhaar will substitute for KYC. Okay. My understanding from what the finance secretary, the banking secretary came and talked to IBA, is now I think is very important that this exercise is not being seen rightly so as only a bank exercise. Okay. It is absolutely imperative that everybody comes together. That is the district administration, the banks, NPCI for RuPay and Aadhaar. Because otherwise these people are naturally hesitant to open an account. They also need the authority, and the faster they come forward. If all of them come forward at the camp, we could finish it this year.
Got it. One question, I think it will look very all over the place, but bear with me. You know, we cannot talk about what the banking system as such in terms of asset quality, credit growth, etc. will look like, say, a year down the line, 6 months down the line. But do you have a sense in terms of what the picture will be, say, 3 years down the line? Because, I mean, the RBI, you've got RBI and the RBI governor being very proactive, freeing up PSU bank balance sheets, you know, changing rules, how CEOs run banks and tightening norms, allowing more private banks in, talking about bank consolidation in the PSU space. What is the space going to look like, according to you?
According to me, it's seeming more complicated than it actually is.
Okay.
What the governor is saying and what the ministry is saying is reasonably simple. You have 70% of the banking system, which is public sector. That needs an improvement in efficiency, and that needs to be given more independence in terms of management so that they can get professional management. And they probably need to introduce systems on appraisals as well as problem recognition.
Right.
Which I think is something that was coming for a long time. And now the Reserve Bank and the government together have introduced a number of measures, whether you see the early stress recognition measures, whether you see the security measures in terms of having a buffer, whether you liquidity measures. All of that is being put in, requires some improvement, no doubt, but that's a mammoth task. On the public sector space, I think in the long run, 29 is just too many banks.
Okay.
If they want to achieve all this, they probably need to bring it down to 5 or 6 banks.
Okay.
And then they can introduce all these measures in a manner that they can be
What would it mean for the private sector in terms of competition?
Well, the private sector in terms of competition, if these guys get efficient, then I can tell you they have an excellent brand name. And if they get efficient, they will protect their market value. And if they don't, then we'll keep gaining market share. But that said, I also believe that the demand for financial services in India is much more than the supply.
Okay.
So at least for HDFC Bank, I think I've safeguarded it. In the last 3 to 4 years, we have gone in a very substantial way into semi-urban and rural India. We've also gone in a big way into what we call virtual banking. And 60% of India lives in semi-urban and rural India. And I would say, arguably, we are definitely the best financial services brand there. And if we link this with the financial inclusion and the development norms and the roads and the changes in agriculture as well as bringing jobs, that is going to be a major growth area, and we are exceedingly well positioned there. Plus 65% demographically is below the age of 35 or 40 or whatever. And so if you can virtually deliver to them, you should be well positioned. So I think demand will exceed supply, and there's space for everyone. In addition, what we've got is we've got issues that people say they don't get payment. So he said, come up with a payments bank. I'm surprised after all the noise why no telco has come up with a payment bank. Maybe banks were not so slow and maybe they were not so fuddy-duddy. And there are general issues on cost.
Right.
So that's the actual intention of the payments bank, that there are not enough people who are getting appropriate services.
Right.
The same as if you take the US, there are a number of small local area banks.
Right.
So all these experiments are being tried, and we need a debt market. But you're not going to have a debt market till you reduce your preemption by government, which is SLR, CRR, and priority sector. And so that's what he said as well. And there is space for a finance company because there are sections that will not fit the bank's target market.
Okay.
So there will be a smaller amount of public sector banks, there will be efficient public sector banks, efficient private banks, banks that are spread all across. They will need to have digital, and then there will be niche banks.
Mr. Puri, I just want your thoughts on asset quality as well.
Okay.
I mean, not a problem for you, but for the banking system. So, and we looked at about 2,500 companies after the June quarter results. And for the first time in many quarters, actually, about 16 quarters to be precise, we are starting to see the first year-on-year increase as far as the interest coverage ratio is concerned. I mean, that certainly is good news, you'd say?
That's good news. See, let's put this in perspective, because I strongly believe we need to understand. As far as the Indian banking system is concerned, based on the stress test done by the Reserve Bank as well as common sense, there is no systemic issue. Is NPAs a concern? Yes. But then we need to split the NPAs into two. One is those caused by the projects getting stuck, and the other is what is caused by the slowing down. This breaks up to about half and half.
What about willful, the third category?
That I'll come to, but that's a small portion. It gets the most publicity because that's what gets you TRP. I couldn't resist that one. One syndicate bank, and that's covered all over the place. What about the poor public sector bank? I've dealt with the chiefs who've been with me in IBA. It's one terrible job to have in terms of managing everything else for the pay that they have, and they work very hard.
Okay.
So let's not paint
Fair
that
enough.
one.
No, I had no intention to do that.
No, I'm not. I wasn't even implying. I'm just making a general observation that I would hope, like Mr. Jaitley, that's, whereas I can't, but my fervent hope is that it's an exception rather than the rule. So as the economy picks up, the half, if you take 10% and take 5 and 5, that 5% will largely move with the economy picking up and those projects getting unclogged. The balance that is left is 60 to 70% provided for. So there is no systemic risk in the system. But the issue is that the public sector banks will need capital because as of now, unlike other markets, the only real source of financing is only the banks. We don't have a debt market, we don't have venture capital, and then even the banks have a large preemption from the government.
Sure.
So what we will need is capital in the public sector banks. The capital requirement will probably, and liquidity requirement, is probably 1 year from today, because even if a project is conceived now, it'll take a little while before.
And the hope is things will pick up and facilitate that.
Facilitate that, and I think it'll give time to the government to decide whether it wants mergers and whether it wants a golden share or whether it wants to come below 51% or whether it, if it merges, then it gives them capability because a lot of the banks are not listed. I don't know, but I think they're working on it.
I just want to come back to what you said. I mean, you said I hope it's a one-off and about the syndicate bank thing.
Right.
What's your sense? You think this is, focused PSU bank cleanup operation which the government is sort of embarking on? While that's good in the long run, if indeed that is what is happening, but what are the impact? I mean, there's a lot.
No, I think you must understand that the government is not embarking on a PSU bank. The owner of the PSU bank is protecting his interest.
Okay. Okay.
So that is the difference.
Fair enough.
I hope my shareholders are protecting their interests by recognizing that I am a good man.
Right.
Right? So that is protecting their interest. But But you know, there's also an impression that.
But is that actually happening? Is that the sense that you get? I mean, because you said you have friends in the.
I think so. Having talked to the Ministry of Finance, having been part of IBA.
So actually, we can see what you're saying indirectly is can see more action, right?
I think you're seeing more action. I mean, when you see the action so quickly on various issues, you were seeing where promoters are being asked to put in more money. I can't give you the names. You're seeing where they're being asked to leave. You're seeing where their equity has been written off. So I think what the governor is really saying is that you have to have a situation where either you run your company properly. If you don't run your company properly, we've got to have either a Chapter 11 or a variance whereby you take the company and then slice it like a surgery and say, it's not viable this way, it's viable this way. And guess what? The equity guys lose first.
Okay.
And then the creditors take a hit.
But do you think if they really went on it aggressively, this could lead to some sort of lending paralysis? Because I mean, people will be scared, bankers will be scared. Why should they? Especially in the PSUs, what incentive is there?
No, I think that can be covered. I think that's taking it to an extreme. For instance, if you take HDFC Bank, I don't initiate a credit, I don't approve a credit. So there is a committee that approves the credit.
No, I'm talking specifically about PSUs.
They can introduce the same systems. I think when they're talking about better risk management and better origination, envisaged in that is the fear of taking a decision, because not all decisions of bankers will turn out to be correct, and you don't want CVC with 20/20 hindsight. I think these are issues that they're grappling with, and they should come up with answers.
HDFC, of course, is a terrific brand. You actually were named as the #1 brand in the country. Congratulations on that.
Thank you.
Now we're talking about, not talking about, actually the media is talking about, analysts are talking about, but you are denying a merger, a potential merger between HDFC Bank and HDFC Limited.
Yeah.
Is that on the cards? Have you discussed it?
Both Deepak and my colleague Parish have already stated that this is a question that's not new. This is a question that's been going on for the last 15 years. We've always said that if a merger makes sense, that is the combined entity, 1 + 1 must be equal to 2 or more, we would go forward with it. Obviously, there are some hurdles to it in terms of the regulatory requirements of SLR, tax, CRR, borrowing from the bond market. Those need to be cleared. So as of now, there is nothing on the table.
Okay, but that is getting clear as we speak, essentially.
No, I never said that. I said a part of it, maybe a small part,
okay,
has been addressed with these infrastructure bonds.
Okay.
Okay,
let me put it differently. If these relaxations came, say 10 years back, you think that would have, no questions, it would have happened?
No, the same problem. We need complete relaxation. 1 + 1 must equal 2.
Okay.
So we need changes, and then it would make sense.
But, what does a potential merger bring to HDFC Bank? A potential merger?
I haven't thought about it.
Because for HDFC Limited, the benefits are straightforward. But what about HDFC Bank?
I haven't dwelt on it in detail.
Or you don't want to tell us?
Which is the polite way of saying what you said.
Okay, about HDFC Bank, overall growth has come off a little bit over the last couple of years, but you're still beating what the sector is doing or the industry is doing. Terrific, 22%. Used to be 30%. Is that the new normal?
No, absolutely not. What we've always said, and there again the analysts and the newspapers have a mind that's more fertile than us and probably more intelligent, but let me give you my view. We have always said that our growth construct is real GDP into 3 or 3.2, which will give you system growth. And since we're gaining market share, we normally grow 4 to 6% faster by gaining market share. That construct hasn't changed. So as you would realize that if we were growing 30%, that was at a 7.5% GDP growth rate. So the 4 to 6% delta doesn't change. Obviously, the balance will change by the rate of the GDP growth.
Right.
Because one of the few banks that straddle India's GDP, if you go back to the C plus I plus G, we are one of the few banks that has 50% as consumer. So if GDP slows down, then obviously our rate of growth will slow down, though our gaining of market share delta will remain the same.
Okay.
So that construct remains. And if we are to believe in the good old slogan, Abhi achhe din aayenge, so obviously GDP will grow. If GDP grows, we grow. And so it cannot be the new normal.
Okay, this contribution, and I spoke to a few analysts and they pointed out the contribution to earnings from retail business is down to about 68% or so in fiscal 14 compared to 74% in the last couple of years. Is that a problem at all, or you think?
No, you must understand the following. We don't target whether it should come from retail or corporate. As I said, we straddle it. Sometimes retail is higher, sometimes corporate is higher. Normally, in a growth environment, the corporate earning is more.
Okay.
Because people, working capital, projects, you have loans, you have investment banking, you have stock market income, all of that. When the economy slows down, then retail's share increases, because unless you have a drastic slowdown and if there's no layoffs, then the retail is more steady.
Okay.
So that is what is reflected in that.
Okay, so temporary, as growth picks up, I mean, things should be back to
Absolutely.
normal. Mr. Puri, you're going to be 65 soon.
So is that so?
So what are the future plans? Are you with the RBI norms and age limit for CEOs, etc.?
What are the RBI norms on age limit for CEO?
65 is the cutoff, right?
Who said?
The recommendations.
Recommendations of Mr. Naik.
Yes.
Yeah, that's an advisory committee. He has his view.
Yes.
And I have my view that actually I have seen no statistical study that shows that bankers become more incompetent than the rest of the world.
They get wiser. I think it absolutely no. But
I haven't heard. So unless RBI is studying some health document which tells them that bankers should have a special age compared to the rest of the corporate world,
okay,
which I'm unaware of.
Okay.
But we will go by the views of the regulator. My views are obviously different, not for myself. I can assure you, one way or the other, I have enough to do.
Fair enough.
But I do believe that this should be a function of the laws of the country, which is the Companies Act,
right,
as well as to be decided between the board of directors and the shareholders and the basic competence of the MD. So I hope you're not questioning the last part.
Absolutely not.
Or my being young at this point in time.
Absolutely. It's a pleasure, Mr. Puri. Thanks very much for your time.